Your billing cycle probably isn't broken, but there are gaps, and they sit between the work being done and you getting paid. Most of the friction isn't client side, it's internal. We're talking about manual handoffs, approval queues, steps that take longer than they should. AI is starting to remove those handoffs, not all at once, but stage by stage. I'm Mike Haile. I'm a chartered accountant and a project manager with 30 years of experience of working in professional services, from boutique agencies to Fortune 100 businesses. The delivery to cash loop is everything that happens between completing the client work and receiving payment. And in most firms, it has 5 stages. You deliver the work. A supplier bill comes in, your team logs the time, an invoice goes out, and you wait to get paid. Each stage has at least one manual step, and each manual step is another potential delay. And delays in the loop don't just cost you time, they cost you the cash that's already earned. That's what this video is about. What AI is doing at each of those stages and what's actually accessible to your business. Everything downstream starts with time. If your team isn't logging time accurately and promptly, your WIP is wrong. Your billing is late and your cost data can't be trusted. I covered time capture automation in a previous video, and I'll link it in the description below. The short version is this: AI drafts timesheets from calendar entries matched to the right job and the right task codes. It's all ready for review. Your team isn't logging time from memory on a Friday afternoon because the system drafts it based on what they actually did. That matters because it removes the first delay. You capture time when the work happens. Even when time is captured properly, WIP visibility is often poor. You know what's been logged, but you don't always know what's billable right now. Certainly not across every project in real time. And again, AI changes that. When time flows in continuously into your ERP processes without any manual batching, your WIP position is current. You can see what's billable today, not what was billable the last time you ran the team report. That visibility changes your billing behavior. Not because you suddenly start invoicing daily, because let's face it, most firms bill monthly or on a milestone basis, but because you know exactly what's ready to bill the moment your cycle runs. There's no delay hunting down missing time, no invoice held up while your team reconciles the numbers. ProProsify's 2024 agency benchmarking report found that agencies billing weekly maintained 15% lower WIP balances and collected payments 22% faster than those billing monthly. The mechanism is straightforward. The more often you bill, the less billable work accumulates, and the shorter your cash conversion cycle. You don't have to bill weekly to benefit from that principle, but you do need current WIP data to act on whatever cycle you run. Once time is approved and WIP is current, the invoice still has to go out, and in most firms, that's still a manual task. Someone in your finance team has to pull in the data together, check it against the engagement letter, and attach all the supporting documentation. Then they send it to the right contact. In a busy firm, that takes days. Not because it's complicated, but because it competes with everything else on that person's desk, and also the sheer volume of invoices. AI addresses all of this. And again, I covered it in a previous video on invoice automation. And again, I'll put the link in the description. But the way it works is once an invoice is approved and finalized in your ERP, the system checks whether supporting documentation is required. It locates it, attaches it, and confirms the billing contacts and sends it. There's no manual assembly, no manual sending. That removes the delay between approval and delivery. And for a firm with 30-day terms, every day you shave off the internal process is a day of cash flow recovered.
Hey, real quick, if you're wondering where AI actually fits in your business, we actually offer a free consultation where we look at your current operations and identify the highest impact places to start. Look, there's no pitch, no pressure. The link's in the description.
Moving down the cycle, most firms still chase payments by hand. That means cash they've already earned sits unpaid for too long. Once your invoice is out, your finance team has to track what's been paid, chase what hasn't, handle the replies, and so on and so forth. In a firm doing 100 or more invoices a month, that's a significant amount of time every week. The manual version is inconsistent. One client will get a reminder on day 31. Another will hear nothing for 6 weeks because your finance person was focused elsewhere. That inconsistency slows down collections and in some cases will damage the client relationships. AI-driven AR tools now do several things that weren't accessible to smaller firms until recently. They analyze payment patterns by client. which clients always pay early, which ones pay on day 45 regardless of the terms, which ones are starting to slip. That tells your team where to focus its attention before an invoice becomes a problem. The AI agent will send personalized timed reminders automatically, not a generic blast. The timing and tone is adjusted based on how that specific client typically behaves, and they classify inbound replies. The client who responds, "We sent a payment last week," gets the reminder sequence paused, but a client asking to split a payment in 2 installments gets flagged for human review. The system handles the routine cases, and your team just deals with the exceptions. Research by Wakefield and Bilhurst found that 99% of companies using AI in AR saw a reduction in days sales outstanding, with 75% cutting DSO by 6 days or more on average. For a firm billing 10 million a year on 60-day terms, 6 days is roughly $165,000 in cash release from receivables. This is no longer an enterprise-only thing. Tools like Chaser operate at the SMB level. Custom-built AI agents are being deployed by firms with 20 people. I know that because we're doing it ourselves. The barrier is lower than it was 2 years ago. The loop isn't complete without the cost side. If your subcontractor invoices are sitting in unprocessed in your inbox, your cost data is wrong. You're billing clients based on incomplete numbers. Your project profitability reports can't be trusted. I covered the AP inbox automation previously, and again, I'll put the link in the description. But briefly, the system monitors your AP inbox, extracts the invoice data, checks it against a relevant purchase order, and automatically loads matching invoices to the ERP. Exceptions go for human review. When your cost data is current, your WIP is accurate, and your profitability reflects real numbers, that's the connection that makes the rest of the loop work. Taking a step back, there's something bigger happening underneath all of this. AI isn't just changing how fast you collect, it's starting to change what you can bill for. If AI reduces the task that used to take 20 hours to 4, your client expects that efficiency to show up somewhere. Time-based billing becomes harder to defend when time shrinks. I've talked about this in early videos. The ones thinking clearly about this are moving forward on a value-based outcome models. We're talking about fixed fee, milestone payments, retainers scoped by deliverables rather than hours. That shift takes time, but the delivery to cash automation work you do now builds the data infrastructure you'll need to price confidently when you get there. You can't move to outcome-based pricing if you don't know what your real cost is per project. Look, the gap between finishing work and getting paid has always been a process problem, not a client problem. AI is giving firms the tools to close that gap at every stage. Time capture, WIP visibility, invoice generation, collections, cost management. You don't have to tackle all 5 at once, but you do have to start somewhere. If this was useful, please do subscribe. I cover AI automation, ERP topics for owners, CFOs, and COOs.